In this video, guys, we're going to talk about seasonal strength and how we're going to use it to make better trades. Stay tuned. Hey guys, warm welcome to you. Right, so I want to talk a bit about this website I found called equityclock.com. Free website. I don't know if they've got a subscription. They've got a subscription service as well, but obviously ad-based model for the free content. Now we're just starting in October when I'm filming this. However, so I'm going to talk about October specifically in this video. However, you can use this when you're coming into the new month, however it may be. So what I want to look at is I want to look at any seasonality tendencies that might kind of give you a theme to work from. So I talked about this in a previous video of how we might use seasonality, and that might have been in kind of some kind of commodity. Commodities are very seasonal, but let's look at it from a stock perspective now. So what we're trying to do, or what I'm trying to do, is I'm kind of looking, I look monthly or every quarter at the very least to see if there is a seasonality tendency that might be a little bit of extra edge. And so if I then find something that has a tendency to be strong over the month, so let's say over the month of October, it's specifically an index or more likely a sector, then when I'm screening through my stocks, if I see a pattern that I like to take, a technical pattern, momentum ignition type trade, any of those type of things, then if it's in the sector that I know historically has been strong over the time period I'm looking, I might add more weight to the trade. I might do a little bit more size. I might take the trade if it doesn't look quite as good on the chart, just because I know I've got the wind behind me potentially. So there's different ways of doing it. So this equityclock.com, and I've got to thank for kind of flagging this one up for me. And there's loads of other interesting bits and pieces on here, so you go and check it out. Okay, so if I look here in October, so really what it's showing here is in the seasonality section. It says here, refers to particular time frames where stock sectors and indices are subject to and influenced by recurring tendencies that produce patterns that are apparent in the investment valuation. In other words, identified below are periods of seasonal strength for each market segment. So this basically says, right, okay, during this period here, this is the stronger period. So as we start October, kind of beginning of October here, technology starts to become strong. 17th of October saying consumer discretionary starts to become strong. Industries, you've got chemicals have a little bit of a run from October to Jan, etc. And there's another book you can get called Stock Traders Almanac. I've got a copy of it here. I shall show you right now. Hopefully you can see that. That's worth buying. Obviously, don't want to share too much from the book because got to respect the author here, but there is some seasonality information in that as well, and some useful kind of tips and ideas based on some of the moves on the broader markets. But this one is available, so let's talk about this one. This one's available for free to everybody, so I'll share it with you guys now. So you start to look at seasonality. So for example, we might go, right, look, industries, industrials and consumer discretionary are doing okay in October. Technology does okay in October, right at the beginning of October. So I might then, I either going to go into my screener on TradingView. TradingView's got a decent screener that you can use as well. Stock screener, or finviz.com, you can use a stock screener there, and I might look and screen through and then add those to a filter. And something I've done already, actually I'll show you this, guys, is I've put October longs into something already based on some technicals. Let's just bring this screen in a little bit more for you, based on some technicals and from some seasonality of the sectors they're in. So these are some of them that I've kind of picked out, but do your own research on this. But the point, guys, is that it sometimes can add a little bit of a layer of edge, and I'm a big advocate of bringing your boundaries in. I've talked about this so many times before that, hey, what we should really be doing if we can is taking the broad amount of markets we've got to choose from, bringing them in. So if you're trading stocks, for example, then why not just focus your efforts on long this is a specific strategy, of course, long in a specific sector or index or industry during a time period that historically is strong. Now, is it going to be strong in this year? You don't know, but you're just leveraging on potential seasonality. Now, there is an argument to say that seasonality in stocks can be dubious, because the seasonality in commodities works because of the weather generally. That's the theory behind it. So stocks may be a bit dubious, but then if you think about it, maybe not so. Maybe there is something to be said for healthcare during certain times, energy during certain times. Anyway, you can dissect it all you like, but ultimately, if you believe and trust the data and says, hey, this is showing you right, this is a strong period of time over a 10-year period. I think these guys look back, so 10 years of data. This is a strong period of time. If you believe the data, then and you assume that you're going to extrapolate that out. Now, of course, but seasonality can affect a lot of things. You take the information, and then you work down from there and go, right, this is a strong month, it's a strong quarter for this type of sector. How can I find some strong stocks within that, or weak if you're looking the other way around, and how then can I use those to bolt into my trading strategies, momentum ignition, whatever you're trading. And so you're adding layers of edge rather than looking at the big universe and trying to scan it. You're going, right, I'm going to scan these because I think there's an edge there. So you're just consistently looking for extra bits, guys, to help you reduce the amount of stocks and reduce the amount of markets that you're looking at, because the fewer you have, the easier life can be, and especially if you're bringing that universe down based on a little bit of extra edge. All right, guys, hope that helped. See you next one. Take care. Bye-bye.